On behalf of Punjab and Sindh Bank, a very good afternoon to analysts and distinguished guests. The days of the pandemic are on the ebb, therefore we can look for better financial health in future. I would like to thank you all for taking out time and joining us today. I welcome you all to the virtual analyst conference of Punjab and Sindh Bank on the announcement of the bank's Q1 2022 financial results. Before we begin, I would like to introduce the management who would be addressing today's analyst conference. We have with us Shri Swaroop Kumar Saha, Managing Director and CEO, Shri Koligal Raghavendra, Executive Director, Dr. Ramjas Yadav, Executive Director, Shri Vinay Kumar Mehrotra, Chief Financial Officer. We have placed all microphones on mute. At the end, during the questions and answers session, we will be coordinating for unmuting analyst microphones for asking questions. I will take you through this process before the Q&A session itself. However, the management will continue to remain unmuted throughout the session. I would now request Shri Saha to address the gathering.
Yeah, thank you, Diksha. And good afternoon to all of you, and welcome to this to all the participants of this virtual analyst conference. We have just today declared the reviewed financial results of Q1 for the FY 22-23. I will go through some of the key highlights of our results that have been declared today, and then we can move on to the Q&A session. So the net profit of the bank has grown by 17.82% on YOY basis, from rupees 174 crore for Q1 to FY22 to rupees 205 crore for Q1 FY23. Net interest income has grown by 22.4% on YOY basis. Return on assets improves to 0.64%. Net interest margin improves to 2.92% in Q1 FY 2023 from 2.50% in Q1 last year. The CASA deposit has improved by 269 bips and now stands at 34% with a growth of 11.97% on YOY basis. The retail, agri and MSME collectively RAM advances has grown by 15.88% on YOY basis. Out of that, retail has grown by 17.99%, MSME by 17.09%, and agriculture advances by 12.29%. On the asset quality front, our gross NPA ratio has declined to 11.34% as on June 22, as against 13.33% as on June 21. The same was 12.17% as on March 22. The net non-performing assets ratio also has declined to 2.56% as on 30th June 2022, as against 3.61% as on 30th June 2021. The same ratio was at 2.74% as on March 22. The provision coverage ratio, including TWO, has marginally improved from 87.89% in March 22 to 88.10% in June 22. The cost of deposit is at 4.16%, improvement by 26 bips on a YOY basis. The bank is well capitalized with a capital adequacy ratio at 16.79%, with CET1 ratio of 13.08% for Q1 of FY 2023. Amongst the other highlights, the total business has grown by 4.72% on YOY basis to rupees 1,74,261 crore as of June 22. The total deposits has grown by 3.10% on YOY basis to rupees 1,01,534 crores. The gross advances as a whole has grown by 7.06% on YOY basis to rupees 72,727 crores, and the operating profit stands at 252 crores for the current quarter. So that is all from our side as far as the key highlights are concerned. Now we are open to your question and answers. Thank you.
Hi everyone. So you will notice a small icon on your screen next to your name, a hand sign. So once you press this, it will alert us that you would like to ask a question. We will go around one by one. The analyst asking the question will be unmuted, and I would request you to identify yourself and your firm before asking the question. For those of you who have joined us through audio call, I request you to kindly WhatsApp me if you would like to ask a question. We will ensure that your question is taken. And if any one of you are having trouble in sending a direct message to this chat, then please forward your questions to our WhatsApp group, and we will ensure that the question is taken. And our numbers are mentioned in the chat box. Yes. So, Mr. Ashok Ajmera, you would like to ask a question to Mr. Saha. Please go ahead.
Yes, good afternoon, Sahab, and
Good afternoon.
welcome you to Punjab and Sindh Bank as the
Thank
managing
you.
director of the company. And
Thank
I'm
you.
sure that under your leadership, with two very good dynamic EDs, the bank will definitely do well. Uh, Having said that, sir, I have got just a few observations and a couple of questions, whatever the time permits. Sir, there is a pressure on our profitability. I mean, because we generally compare, with the last quarter and not the necessarily the corresponding quarter in many of those cases, like the advances, the NPAs, and the profitability. So the profitability has gone down to 205 crore as compared to 346 crore, the net profit. Uh, so one is that your comment that going forward, how do we ensure and come back to the good level of the profitability? Shall I ask the some two three question after
Yeah, yeah, please,
or
please go ahead. Please go ahead.
sir, my other question, when I see the your advances segment wise, uh, uh, the food and processing industry has gone down from 1,567 crore to 775 crore. Is it because of the some reallocation or repayment, or because it has some other reason that why drastic change from 4.52% to 2.11%? And at the same time, the NBFC has also come down the exposure from 9,473 to 8,992 crores. Other than that, there is not much movement in this. So on the credit side, how do you look the future growth? Because on quarter it is almost mute. So this is my another. I think if these two questions, if you just first take it.
Yeah. Thank you, Mr. Ajmera, for your questions. Yeah, you are right on the profitability front. We it is always better that we look into a sequential performance as well. So, but you are all aware that regarding the market dynamics of the yield movements in the treasury front, so our bank was also not immune to that system, to that ecosystem, and that's why we had a impact of 109 crores of depreciation loss in this current quarter. We had to book that. We had a 55 crore of trading profit and 109 crore of depreciation. So the overall contribution from the treasury aspect was a negative compared to what was last quarter or what was the Q1 quarter last year. So that had an impact on the overall operating profit cycle. But what we have in place is a comprehensive plan to have compensatory income from the non-interest income, particularly on the fee side. We will be concentrating very hard on how to improve our uh, fee income from insurance, bank assurance business, wealth management, and health insurance, etc. We'll be going into a co-branding uh, uh, arrangement with a credit card company also, a large credit card company also, and which will all take place. All these things will take place, or wealth management also. We will all be able to complete that expected by Q2 or maybe the latest by October the year. So by compensating our MTM losses through these other income sources, we feel that the operating profit and the net profit will be able to maintain at least at not below that, at least at the last year's level. So that is how the profitability is panning out. In terms of our credit, you are right that the credit growth has been uh, uh, muted for the bank over the last few years. In fact, last year also, the credit growth was only 3.8%, and particularly because the bank had taken a call to rejig the balance sheet ratio between corporate and RAM, which was much more skewed in favor of corporate advances to move it towards the RAM advances. So that transition happened last year, and we were able to bring the ratios in a different level in March 22. Having said that, we will be this time, if you see our performance this time on a sequential basis on advances, we have grown our advances at 3.32% on a sequential basis. So we will be conscious of our increasing our credit growth, and we will be we have a guidance of above 15%, in which will be broadly distributed between RAM above 20 to 22%, and on the corporate side of 8 to 9%. And as far as the food processing was concerned, yes, there has been a repayment from NAFED and FCI. So that brought down my food processing outstanding down. And of course, the NBFCs has come down. We are taking conscious and controlled exposure in NBFCs, but we will be continuing to do that. This is a temporary, maybe a drop down in our NBFC exposure and in food processing. And we will be also looking for good rated, top rated NBFCs for our corporate, on a corporate side also. So all in all, what I can submit here is that the bank will be looking for credit opportunities much more focused manner than what it was doing erstwhile in the previous years.
Sir, on this, just my observation and submission that since our base is so low, I mean, we have got a plenty of scope to grow as a pan-India bank, Punjab and Sind Bank. Like, you should take a cue. I will not say exactly a cue, but a similar situation. You know, the Bank of Maharashtra, which is also comparatively a smaller bank in the public sector bank, their credit growth, if you see it, it is 24-25%, and even now also the target is more than 22%. And even the corporate book also can be increased apart from the RAM, because there is too much of competition in the RAM with the other banks also, other top peer banks. So I think we have to rejig our policy, and we can really, and triple B is also, it's an investment grade. I don't consider that a bank like us on case to case basis should avoid triple B cases, because we would get those kind of cases, and we can have the assessment case to case basis, and can go even for triple B rated accounts also, which also are good account, mid cop, small cop, these accounts are there. So this is just a piece of it. I mean, I just thought of making an observation on it, that we can definitely grow, because you got a very experienced people now. Even the top management is also very experienced, and definitely we can have the pan India presence by growing little bigger than what we are estimating on this. Sir, having said that, sir, I mean, it's a food for thought for you. But another my question, just a small observation on this fraud account note number 12. 1,242 crores of the fraud which has been reported. It is mentioned it is in this quarter. Is it right that this 1,242.66 crore is only in this quarter? And and fully provided for it during the quarter only?
Yeah, I will start answering from the back on the second question and move to your first observation. Yes. Yeah, the second question regarding the fraud, yes, it is right, and it is fully 100% provided for. So that takes care of the things on the second question. On the first observation, Mr. Mehra, you are absolutely right that the bank has tremendous potential to grow in spite of being a geographically concentrated bank, just like Bank of Maharashtra. So, but any credit growth cycle also needs to be backed up with good underwriting processes and good policies and risk appetite. So that goes hand in hand. Having said that, what we are, that's what I'm saying, with a 3.8% growth last year, FY 21-22, we are estimating an above 15% growth on the current year. So we are trying to leapfrog in our credit growth also. If I just look into these figures, above 15% and more and 3.8% last year. Bank of Maharashtra, exactly, we are closely observing how they are growing, to what extent they are growing, and maybe we will also, and that their growth of 25% or 22% is not coming in one single year. That they have also paced their credit growth in a very programmed manner, in a calculated manner. We also intend to do that, because ultimately we should not wade into the repetition of what happened in the bank in the legacy scenario. So we are conscious. You are absolutely right. There are ample opportunities, whether it is NBFCs and other sectors are concerned, and we will be looking into those areas also on how to grow. But primarily, we will like to have what we were growing corporate negative last year. We expect that on the corporate side at least, we grow at between 8 to 9%. That will take care of the, and of course, with a RAM growth of around 20 to 22%, we expect that we keep a RAM and corporate share between 52 and 48 in that ratio. So we are conscious, and we will be planning out a pan-India visibility of the bank, pan-India expansion of the bank, publicity, and that's why we have posted as general manager in Bombay specifically for marketing good corporate accounts in Bombay itself. Though banks of our size do not technically may require a general manager posted in terms of the volume of business that we have, but we are conscious that how to penetrate in good corporates, and that is the best place to be in. So that structural changes also we are bringing about simultaneously to penetrate deeper into the other areas. So I think all in all, we are now poised to have a good credit growth, at least more, if not more than the system, at least at par with the system.
Point well taken, sir. Just last in this round of the question is on the this emergency line of credit restructuring and other thing out of COVID. Now, since all the installments and repayments must have started already, I think 100% almost. So, what is the figure of this restructuring which was due to the COVID, and what is our efficiency ratio in that demand which we raised in this month or this quarter from those accounts? Can we get some figure on that so that we have a future visibility of those things? And another one on the treasury, that how do you look going forward on the investment side, sir?
Right. As far as the book on the restructuring advances resolution framework 1 and 2, it is the figures are given in 30 page slide number 34. We have a total book size of standard restructure around 2,407 crores. Out of that, we have slippages in this quarter. Out of the 321 crores of slippages that we had, 42 crores slipped from this restructured book. So in view of the time period of the moratorium going away, there is still some stress in the MSMEs, but we are confident. That's why our slippages in MSME in the Q1 are higher than last on the other sectors. But we still feel that MSMEs, we have a strong monitoring team and a recovery mechanism here. We'll be able to contain our slippages. Overall, we intend our what you call our slippage ratio has also been very good this time. We have a slippage ratio of 0.52% on the current quarter. So overall, we intend to keep the slippage ratio at less than 1%. So overall, we will feel that with aggressive recovery, strong monitoring mechanism, we will be able to bring down our gross NPA below 10% by the end of March and net NPA below 2% by end of March. And on the GEC, on the treasury side, yes, though these certain market dynamics will be in place as far as going forward, we already know the impact on the current quarter. We have an impact of 109 crores. But with the MPC now meeting shortly and declaring their decision on the repo, we expect some hikes to happen, anything between 35 to 50 bips. So on that front, but however, though it can still be around 6% by the end of the year, we feel from our portfolio mechanism, because we have reduced our duration also, we feel incrementally from Q1 onwards, we don't see much of an impact, which will really be negative on my balance sheet. We'll have some impact, maybe 15 to 20% further incremental impact may happen, but we'll have a compensatory mechanism for increasing my fee income.
What is the modified duration, sir?
2.69.
Both AFS and
HFT Milakar.
HFT, 2.69. Okay.
Yeah, it has come down. It has come down. It is given in the slide also. I don't remember the slide number.
No issue, sir. No issue. I'll go through it.
Okay.
Thank you very much for this round of questioning. If time permits, I'll come back again, sir.
Thank you. Thank you, Mr. Ajmal.
Yes. So, Mr. Saha, our next question is from Mr. Sushil Choksi.
Okay.
Mr. Choksi, you may please go ahead.
Good afternoon, Mr. Choksi. Are you on mute?
Hello, good
Yeah.
afternoon.
Good afternoon. Good afternoon.
Congratulations, Mr. Sarup sir, on appointment to as MD of Punjab and Sind Bank, and good evening to all of you,
Good evening.
Rajendra and Doctor also. So, for my first question, and Mr. Ajmer has taken all the questions, so I'll limit my questions to few. Uh, what is the best scenario for your CD ratio?
The scenario that we are working, we are at 72 now. We 72 hai na abhi? Yeah, 71.63 now. We expect that by December, by March 23, we should be anything between 72 to 73%.
So, is it not poor in the light of current treasury situation?
Yeah, we feel that we have worked out our plan because our as I said earlier, that we will be still focusing primarily on the RAM segment through a co-lending mechanism. We are planning to build a portfolio around 2,000 crores by co-lending. We are creating pipelines for digital lending also. Will be a pre-approved personal loan scheme is already in place. We are going to bring that into our mobile app, and we'll be going into various tie-ups with other NBFCs also for co-lending. So, and of course, on the MSMEs, we'll be doing outreach programs, cluster-based approach for MSME. We have already taken out a scheme with very competitive rate of interest on MSME Satkar. So that has given us good response in the market to penetrate where we were not there earlier. So, and therefore, we feel that we can go between 72 to 73 by end of March 23.
Sir, my question is, can't we have an incremental higher outlook rather than 70 to 73? Because in view of current treasury situation, and one doesn't know when the war will end and when the inflation would taper, and global Feds, all the central banks will be in acceleration mode and may go into overdrive. So why can't we look at a higher credit growth and lower our investment book? That is question number one. Second thing is, how well positioned are you to improve your CASA and cost to income?
Correct. As far as your credit growth observation is concerned, we will look into it. As of now, we have given a credit growth guidance of 15%, which compared to 3.87% itself looks very stiff in terms of the arithmetic of it. But we are confident that we can achieve that figure. We will look into where our investment portfolio can be rejigged a bit so that we maintain our proper optimum CD ratio. And what was your second question? Was on CASA. Yeah. So CASA, yes, we are very low. We are at 34% now. It was 31% on a year-on-year basis. We will be. That's why we are taking out new products on the CASA front. We have taken out our current account will be on focus. We have taken out a current के साथ POS terminal combo account scheme, which will help us to garner more current account business. We'll be going after corporate salary accounts in a bigger way. So CASA will be our focus area going forward.
Second thing, sir, you mentioned about co-lending. Are you looking at secured and unsecured both, or only secured products?
As of now, secure.
Okay. Second is, with the rich experience, all the both the EDs and yourself and the previous management is concerned, all have come from large banks. And your experience cumulatively in last 3-4 years since the time the con calls Mr. Raghavendra Rao and Mr. Krishnan started, now you continue the legacy. What kind of digitization, what kind of other expenses which will accelerate the bank from the past to the current to get on par with the larger banks, and what kind of initiative and expenditure have you budgeted over a period of next 12 to 24 months?
See, as far as the on the digital front, the bank, you know that any digital leapfrogging will depend on the technological platform that we stand on, right? So we were with a Finacle 7 version, and the Finacle 10 version migration has just started from 2-3 months back. Any migration takes its normal time period of anything between 12 to 14 months to complete the process. It goes in phases. So there is a requirement that we upgrade our core banking solution to the latest version very quickly. But we will not stop on completion of that process. What we had started doing is the bank last year took out this PSB Unique app on the and the corporate biz app on the mobile banking and omni-channel app. So what we are intend to do is to whatever technological platform of Finacle 7 supports us, we were going to revamp this app in a big way. And already my rating in the app has started improving over the last 1 month because of the upgradations that we are doing in that app, bringing in new features. We were in a slow starting position because we actually implemented this app only last December quarter last year. So we were going slow in that, but now that is there, we are trying to bring that platform as fast as possible at par with the bigger banks. And once we can map these two, the core banking and the digital app, and make a super app and bring in digital lending through that process, bring in wealth management, bring in customer acquisition. So my operating costs going forward will also go down. But this all this will have a medium and a long-term strategic way that we are thinking. So my core banking upgradation is on. We have a budget of around 3 years, over 200 crores for the 3 years going forward. So that technology thing, we have an excellent IT advisory board wherein Mr. Mrityunjay Mahapatra, the ex-MD of Syndicate Bank, Professor Krishnamurthy, he's also a well-known person. They are advising us on our technology front. So with their support, we feel that maybe by March 23, we will be in a much better position on our technology and digital front. So that will help the bank to take more and more initiatives in the current context which are offered by the other banks.
So my last question, what is your guidance on credit cost for the whole year?
Credit cost guidance would be less than 1.5. Sorry, less than 1. Slippage ratio would be 1.5. Credit cost
in the Q1 you had already 0.17.
Q1 we were at 0.04%.
Yeah, but then you are seeing upward bias in the.
Yeah. We are in terms of MSMEs, we still feel that there is a bit of a stress. Our internal assessment is anything we should be around 0.5, but on a conservative aspect, we are projecting below 1%.
How much of lending you have done under the government scheme? And
we have a government guaranteed. That information is in the slide. Government guaranteed is, I'll tell you.
Are you estimating any stress in that book?
No. We are not estimating any stress in that book. Not this. Government guaranteed. You are talking of government schemes or government loans?
No. In the COVID, most of the MSME were handed out 20% plus 10% increase.
Okay. GECL. Okay. My GECL book is
TLTRO 1 and 2.
Yeah. That slide is also there. I'll tell you which slide is this.
Sir, I'll go through. That's not a problem. I'm just asking, are you expecting any stress out of that book?
Yes, not significant, but of course, we expect, because in this quarter one, out of the 321 crores of slippages, 42 crores was from the restructured book. So that amount will be there. So there will be some slippages we expect because our SMA2 on MSMEs are also a portion is there. I think that amount is.
No problem, sir. In view of short of time, I'll come back in the queue line, or we'll take a question offline with you.
Okay, done.
Thank you. Thanks a lot.
Thank you.
Hi, so is there anyone who would like to ask the question by raising their hands up? May I remind you that there's a symbol or an icon rather next to your name on the screen. So you can press that and we'll unmute you if you have any questions. All right, so I don't see any questions right now.
Oh, hello,
so
can I come in? Can I come in? I had raised my hand for the second time opportunity.
Sure, Mr. Admira, please go ahead.
I think I had lowered can raise the hand. Thank you very much for giving me this opportunity. Sir, hello.
Yes, sir. Yeah, Ajmera ji, boliye.
You are there, sir?
Yeah, I'm there.
Yeah. So thanks for this opportunity. I just want certain information and clarification on note number 20 that 5 borrower accounts of 141.96 crore additional provision has been made, which were the NPA account. Which are those accounts, and what is the status of the recovery in those accounts? This is the next question of mine.
These actually are on a prudent measure. We have provided additionally. This is beyond what was required for to be done. So, and some of these accounts maybe it'll have an impact in Q2, Q3 going forward. So we thought it is to strengthen my balance sheet and to have a better provision coverage ratio. We provided this additional incrementally, 141 crores in 5 accounts.
Total outstanding on these 5 accounts.
Outstanding.
And
so that information we'll share with you separately because I don't have that now.
Okay, sir.
Okay.
Then, sir, there is a small this RBI penalty also for a bank like us. 27.5 lakh rupees penalty RBI has levied for non-compliance. What kind of non-compliance these penalties are for KYC, or it is for some?
No.
And going forward, have we taken the proper precaution that no?
Yeah, that has been taken care of. Yes, at the time of the RBI inspection, they found certain inconsistencies in our EBLR policy, the external benchmark lending rate. So that we have now, that is completely taken care of at this point of time.
And sir, my last one sort of an observation which I experienced in our bank, that there are some certain foreign banks, who do the onward discounting of the LC issued by our bank. They are not honoring the LCs of the bank issued by the Punjab and Sindh Bank. So I had taken up this point earlier also with the management that being a public sector bank, where the government holding is almost 95-97%, why is it so that the letter of credits issued by are not honored for the further discounting or further, buyer's credit and other things? So it is just to bring it to your notice that you can take it up with those banks. Because there is a lot of opportunities of issuing the LCs, for the imports of the goods for the many of the clients, corporate clients. In fact, in one case, in principle sanction was even given for 75 crore, but they couldn't take the sanction because their our LCs were not being honored there abroad. So this is just for your information, sir. Thank you very much for this opportunity. One last passing this thing that segment wise and industry wise in the corporate credit, when you say that now you are going to give the attention, what are your views of which kind of segments and industries this credit demand may come into you? And are you considering the, those industries which were bad in the past, like textile, paper and engineering, some of them steel industries? What is your outlook now, even though there may be some bad accounts in those sectors, but are you considering now fresh exposure to those kind of sectors which have done well in the recent past?
Yeah, we will take a call on a case-to-case basis. Of course, we will look into good infrastructure, HAM projects, ethanol projects, renewables, food processing units,
Solar.
renewable solar. But all will be taken care on a case-to-case basis on a merits of the case. But we are open to taking corporate, increasing our corporate book.
Okay, sir. Thank you very much, sir, and all the best to you.
Thank you.
So thank you everyone for joining in today. And our team will be sharing relevant information docs with you. In case you have any queries, please feel free to reach out to us. You have our WhatsApp numbers noted down in the chat box.
Thank
you once again.
Thank you.